Today I want to talk to you about being realistic and accountable for your actions. Okay, you know what you should do, but then the emotional urge to do something else is powerful. It's an interesting trading dilemma, but don't kid yourself. Be accountable and do the right thing or it will cost you. Hi, my name is Richard Lee. I manage the stockradar.com.au website for you. We identify the early stages of a trend, we jump on it, simply follow it higher and use our risk management process to protect the trade, be it a small loss or a big profit. Okay, reducing the chance of unreliable trading signals and lifting the odds of success is my everlasting mission. I'm always trying to stretch that gap as best as I can, okay? In such an imprecise science as trading and analysis can be, it is my aim to always stay simple and use tried and tested methods I know work. It reduces the odds of unreliable signals and to always lift the probabilities of success as high as I possibly can. In this week's trading tactics, I will discuss the simple approach I use to maximise the benefit of using moving averages as an important cog of the trend intensity indicator. Okay, for now we will go and check the markets. Okay, so the Dow Jones. Struggle a little bit at the moment. We've got this little trading range here. We're back in the trading range. We've actually now I've actually drawn a little line across here. We've got now three sort of lower highs here. Got a few high little candles there. Plenty of debate going on here, and we've got the momentum index down here. This is certainly a change from what we've seen. Okay, and I would not hesitate to call this a distribution pattern as we get advances that don't really go on, and then we start getting rallies that don't even run out of power pretty quickly. So the sellers are starting to dominate this. Whether we see a more major correction, we don't know. Like our market, it's come down 10%. Whether we get further or not, we just don't know. And I'll have a look at that shortly. But this is a concern at the moment. The Nasdaq is not looking so good as well. I've actually drawn a little horizontal line across here, dotted line, just a little bit tentative at the moment. We've got highs here, we've got lows here, and now we've got highs here, and we've come off again this week. I think I spoke to you last week about watching this area. It's important. The buyers have tried it on down here, but again, we've got this heavy activity of both buying and selling going on down here, but momentum has gone right out of this market. This was a very, very strong trend we saw here, but it disappeared, and as I said before, this is looking very distributive to me, which means the smart money is selling into the rallies. Okay, so that's the major indices, which are probably in trouble at the moment. Okay, so let's go to commodities. Gold, not telling us much at the moment. I won't spend too much time on it. We've got resistance up here. It's above the average. Nothing really about the volume. That's quite positive, but ultimately it's the price that guides us here. So COMEX gold at the moment, resistance is intact here, up around 2,000 US dollars. If we get through there, we may well have a rally. But under all the conditions of geopolitical unrest, inflationary pressures, it is not really performing. So not all that interested in gold at the moment. Okay, Brent crude. This has all of a sudden got a little bit volatile all of a sudden. We had a beautiful trend up for the last couple of years, but this Russian invasion and the uncertainties about oil, America releasing stocks, is Russia going to cut off is Europe going to stop buying more oil from Russia? All this sort of thing is creating volatility. And we were down a bit last night, but again, we don't have a lot of volume. There's not a lot of selling going on there at the moment. So, it's a bit of an uncertainty at the moment. We had a good rally. If I go right back here and have a good look at the history of this chart, you can see the major low down here. And now you can see where we are. We're up around this major high. We've dipped into here very quickly and we've come back very quickly. Okay, so this is a fairly significant level around the 140 US dollar a barrel level. So, and with this volatility creeping in, it certainly concerns me a little bit. We do hold some oil stocks, but we'll be very careful about what happens there. So just keep an eye on Brent crude. Okay, we want to get rid of that. Okay, now copper futures. Similar sort of thing to gold, not really much happening. It's tried and failed up here. We've still got the average pointing up, nothing launched on the volume front, and also this is positive from the momentum side of it, but we really need this high here, which did fail. The sellers jumped on this the first break, and we can see that the buyers are still edging up. So we're getting into a little bit of something's got to break at some stage. Whether it's up or down, we don't know at this stage, but that's how copper's looking for us now. Now, let's go to the ASX 200. I've got a fair bit to whip through today, so I'll try not to keep you for too long. The ASX 200, I've taken all the lines off here. We can see the big high at the top here, the big low down here. We've got a 10% correction. Is it enough? Well, we don't really know yet until this takes the top off this. Now, we've had a couple of weeks here, we've rallied up, we've come back. Uncertain at this stage. We have that little resource part of our market, which is probably keeping us a lot stronger than the American market, which is good. But we're looking for stocks like BHP, which I'm going to look at in a minute, to give us a bit more of a guidance on direction here. We've got a spark of life down here for momentum, but at this stage we are still locked in this trading range. We've had a good rally off the low, but to break through here is going to be something more powerful to push it through. In the world of uncertainty, it's certainly unsure. Okay, so let's just have a look at some stocks now. Now, first, before we do that, the ASX, the Stockradar portfolio is up 4 to 34. There are 31 stocks and 3 ETFs in that 34. So of the 31 stocks I cover, of the 31 stock picks out of 167 stocks. So you can see why it's very low, because they're just the highest stocks. BHP's rallied quite a lot. CBA, some of the banks are doing well. They're dragging the index up at the moment, and the rest of the market is not looking that good, apart from a few stocks that we like and that we are in, some good trending stocks, which I'll talk about a bit later on. Okay, the 5 stock portfolio is back to being 5 out of 5, and the 10 stock portfolio is back to being 10 out of 10. Now, I don't make predictions on the market, but that's just telling me there's some strength happening in there. It also shows us how, if we do get trending stocks, we pile them into a portfolio and try and capitalise on it. It's how our leverage works with the portfolio system, and it gives us a razor-sharp focus on trends. We have high conviction on what we do. That's why those portfolios are full at the moment. Okay, now let's go to BHP and see what it says. Now, we haven't partaken in this rally at all because there's been no trend reversal or no new high. We may get a new high shortly, but for the moment we are neutral. The volatility of this up from 35 to 55, back to 35, back to 55, it's volatile again. So increased volatility means higher risk. So we've got to be a bit concerned about that. So this is why I stand by what I do, looking at trend reversals or new highs, and BHP has given me neither at the moment, so I stay neutral. But it is high like the ASX 200, and if we look at the next chart, CBA, which I will do in a minute, the BHP is 12% of the ASX 200, CBA is 9%. If we go to the next two stocks, there is, let's have a look at, there is NAB, so CSL at 6.5% and NAB at 5%. So those 4 stocks make up 32.5% of the index, and that's an awful lot. And this is happening all around the world, America, everywhere. These big stocks are just dominating the index. So you can really not do much top down sort of stuff with some of the other stocks. Okay, so things like South 32, CPU, NAB, which are going on nicely, are really at odds with what is happening in the general market itself, which is very weak. So for BHP, its trend intensity rating is +1. It will certainly be a bullish signal for breaks above here, but it hasn't done that yet. We've had a pretty quick rally up to here, so we'll have to wait and see what happens. If we look at this volume here, it's been fairly active, which means there's plenty of debate on buys and sells, but as the price is going up, that's a good thing. But we need the signal yet. We need this barrier to break, which is up around $53, $54. Okay, momentum is also positive because we've had this quick rally here, okay? So this has sort of given us a good indicator basis, but not a price basis as yet. Okay, if you bought this one, well and good, but what do you do now? That's the question. So I'm just sitting here waiting in the wings, watching this one for now. Okay, so if we're going to go to CBA and look at that, it's also an interesting one where it's come back off its lows. It's in a trading range. We had a beautiful trend here before. It's now finished that trend. We've got stopped out. We had a lower high here. The support came in. We've now broken that lower high there, and we've come back up here to near the highs again. So we're in this flux situation, and you can see here the moving average, the price is rotating around a flat moving average. I'm going to talk about that in trading tactics a bit later on, because it will give you an idea of how I'm thinking and why I'm thinking it. Price confirmation is vital for CBA, so I need a break above here before I am going to do anything at this stage, or else we get a trend reversal from lower levels, which may still happen, so we have to wait and see. Volume has been quite good on this last spike up, which is encouraging, and there's a spark of life in the momentum index, so things could be slightly positive. Trend intensity rating is still in a neutral area at +1. I need this price confirmation of a new high to give me a signal. So you can see when I look at the ASX 200, I look at BHP, and I look at CBA that dominate the index. This is why they're all looking fairly similar at the moment, so be a little bit careful at the moment. Okay, now The next stock I want to go into is Origin. Now, it's been an interesting stock, and the point I want to make today is we know we've had a beautiful classic reversal from the lows. Origin was in the doghouse for quite some time there, but it did resurrect its fortunes in no uncertain terms. And the interesting thing is we saw that the big switch here, we had the downtrend, we've got big accumulation here, then we got a trend reversal pattern as the buyers started to come in here, we got the break, that's the switch, we get into a trend, we set our stop and we follow this higher. Now, what we've got here is we've now got another break of resistance here, and which adds confidence to the strength of the advance. If it can get through a level like that, previous resistance, it just adds a little bit of confidence to the fact that this is a good stock and it's trending well. So the trend is developing very well for Origin. The trend intensity rating is 10, and you can see this beautiful volume down here on demand, and this momentum is quite steady, which is quite nice. Okay, nothing overblown or anything like that. This is a good, solid, steady trend, and we can see here there's not many down weeks in all this rally here as demand stays strong. So Origin has been a very interesting one for us. Okay, let's go to NAB, the best bank. It's running along well. Again, just a simple thing of going back to the simple, tried and tested methods. I have a trend reversal, I buy it, and I set my stop, and that's what's happened with NAB. So we got into this one down here at around about $21. It's now $32.50. And it has not had anything greater than a 10 or 15% correction throughout this whole move. So it's in a trend, so I just hold it and hold it and hold it. It may go to $33, it may go to $53, I don't know. So some of these trends just take us where we don't expect, but that's what happened. We've got great demand down here, momentum is good, everything sounds fine, trend intensity rating is plus 10, simply a buy and hold. Okay, it's in a trend, so all we do is we follow trends. I don't predict where it's going to go, I just follow it, and as my stop goes up, I'll make sure I protect that profit. Okay, so the next one I want to go to quickly to have a look at is S32. Similar situation here. I've got a couple of comments about the moving average here, which I'll show you in the trading tactics. But again, a simple trend reversal, moves higher, moves higher, moves higher, moves higher. So we've got a big lot of profit to protect here. So we've got to make sure we do that. And we've just said our stop. Where are you going to put your stop to protect your profit? Don't sit here and just wait and react to the market. Set your stop before the market does it. So I've got my stop set in here, I know what it is, and when that stop goes off, I know exactly what to do as I sell South 32. Whether it happens here, whether it happens at $6, I do not know, but all I know at the moment is it's trending higher, it's above the average, volume is good, momentum is powerful, and I haven't got a trend intensity rating in here, and I should have, but it would be about a plus 10. Okay, so that's South 32. The next one I want to go to, and you've seen these charts before, and I keep showing you because that's where I'm making my money at the moment, okay? It doesn't have to be a lot of stocks, just a few stocks, and that's why I have very small, high conviction portfolios rather than trading 20 stocks or 30 stocks, which is just really a scattergun approach. I'm really looking at focusing on those trends. That's what my business is, that's what my strategy is. Okay, so Computershare, you can see here we had a trend reversal down here, just above 1450. It's now 2520. But again, we can see a similar thing here. We've got the cycle high here. This is the high for CPU for Computershare. It broke this high, came back and tested it, and it's gone straight back up again. And we've got a beautiful power thrust pushing this stock higher, as there are so many more buyers than sellers in this market. There would have been some sellers here, and you can see the sellers here, but they're now reversing their positions and they're now buying back their positions. Okay, so this creates a power thrust. So then we just hold and follow the trend. We never know where a trend can take us. So I'm going to show you a stock in a minute that is just starting to break up and looks interesting. So we just don't know. We just make sure that we follow with the stop, so we limit our losses and run our profits. So trend intensity rating for Computershare is 10. Volume is still very good. Even now we're seeing great demand, and momentum is also powerful. So there's not really much choice but to hold this stock and raise your stop, and that's how it works. Okay, so they're just about simply following trends. Now let's look at one stock that may be beginning a trend. I showed you a couple of weeks ago this stock, and it's been developing very nicely. And you can see here that this is the old highs, the downtrend. We've got the big picture here, which took about 2 years for this to develop, this trend reversal. It's now starting to break above it. Okay. Now not only that, we've broken above the moving average. We also, if I squeeze that little spike down a bit, we look at the volume here. We can see the volume has been very nice throughout this move up towards the trend intensity. So again, I'm being conservative. I'm waiting till that trend has actually developed before I jump on it. I'm not trying to predict a trend. I'm not trying to predict a change. I'm waiting till it happens, then I jump on it. So we've now got positive momentum, positive volume, it's above the average. And if we go and have a close look at this, we can see here, this whole move up here has had 1, 2, 3 sort of down weeks, but generally demand has been very, very strong for this stock. And that's a really good sign when it starts to do that sort of thing. So Wally is certainly one that should be of interest to you. This is a trend intensity rating of +2 from last week. It's now broken this week, and as all these indicators are looking positive, it's probably going to get a trend intensity rating of +9 or +10 if it holds these levels up till the end of tomorrow. Okay, so that's Wallace Parsons, an interesting stock. Interesting how it took over Jacobs Engineering, and there's a little bit of debate over whether it was a good thing or not, but it seems now the market is starting to warm to that and buying it. Okay, now the next one I want to look at is Coles. Coles is an interesting picture. Now, I'm not doing anything in here, but I just want to show you down here. Every chart is interesting to me. We can see what's happening. We just need, sorry about the extra E, to be patient and let it happen. Now, so I can see what's happening here. I can see that this market's had a good rally. It's now in a consolidation pattern. We've got 1, 2, 3, probably 4, 5 highs up above $18 to $19. Okay, I've got a little bit of buying maybe coming through here. I've got a big support level down here holding this market up. So really all I'm really going to do now is sit and watch and wait this, because I think it might break, but I don't know. So I have to wait until it happens and never anticipate anything here. But I do know that if R1 gives way, there's a very high odds of a rally developing from here. Okay, high probabilities, which is what I like. Okay, so I just set my position and I set my stop. So I make sure I've limited any loss in case I'm wrong. But if I'm right, then I'll be moving the stop higher as it rallies higher. So Coles is very interesting to me. Every chart is interesting to me, but you just got to wait for your moment until it happens. A bit like Wally, which we just saw a second ago. So Coles looks quite interesting there. Okay, there are plenty of new entries coming up. Go to Stockradar Trading Centre, including weekly updates on stock entries, exits, stops, reversals, and a trend intensity rating on every single stock. They're all equally weighted, no market cap or anything like that. We just look at every stock on a similar basis, and I rate them equally using those 4 indicators, which I'm going to talk to you about in a second. Okay, so let's go to trading tactics now. Okay, trading tactics, moving averages, stocks on the move. Okay. So I look at the exponential moving average, which is what I like to move, and I'll explain to you why in a minute. Okay, I just want to go for a brief recap on what the trend intensity indicator is. 4 components of the trend intensity indicator: trend, volume, moving average I'm going to talk about today, and momentum. Okay, we combine and calculate the trend intensity indicator using those 4 things, and it creates the trend intensity rating system, which I work throughout the trading centre for to look at every stock. There's lots of reds on there at the moment, lots of greys, but not a lot of greens, but at least the greens are the ones that we're trading. So the trend intensity indicator combines and weighs these 4 simple tools, so I'm not basing anything on one thing, a moving average or anything like that, because that's dangerous. I try and create a weighting of sentiment indicators into one value, and that's what I do with the trend intensity rating system. The trading centre is structured around the trend intensity rating system that rates all stocks equally. This generates an invaluable benchmark that highlights only those stocks with compelling trending qualities that offer the best prospects of sustained price movement. I'm waiting till it happens before I jump on it. Okay, so it gives me a bit of certainty. Okay, moving averages are useful in confirming trend direction. Also, they give you a high probability element. Okay, if a price is above a moving average, it's likely to go higher, vice versa. The main types are simple weighted exponential moving averages. You can go to Incredible Charts. They're a great source of definitions for indicators, all sorts of indicators they've got. And if you want to see how these are calculated, go to Incredible Charts to have a look. Okay, how do they look graphically? Well, you can see here that they all respond similarly but a bit differently. And I like to use one moving average because I get to know how it works. It becomes my friend after a while, and we are pals and we understand each other, and that's why I use the exponential moving average. Okay, so you can see they're slightly different but not a lot different. Okay. I use the exponential because I like the weighting to the most recent data. Always the latest data is always the most important, okay? The further back you go, the less importance there is. And as I said to you before, I understand the interaction with price and the moving average and how it works. I've been watching it for years and years and years, and I can see exactly what's going to happen and how it's going to work on a high probability basis. I'm not certain, but I've got a very good idea. The idea is it smooths data to gauge the trend or to identify a change in conditions. So two purposes: it identifies a trend, which you can follow behind it, or when a change in conditions is going to happen, like what's happening with the Dow or the Nasdaq, you can see what's happening there. They're back below their averages or near them. It gives me an idea of what the trend is going to do, and this is that one component of the trend intensity indicator. How do you use it? My premise: one moving average only. That's all I need. That signals a potential change in conditions when it is violated by price. So you can see here with South 32, when the price goes above the average once or twice, the more times it's above the average, the heavier the weighting gets in the trend intensity indicator. So, a break can give me a bit of an indication, but it starts to move a couple of times above it, then I really am getting certain. And you can see here, the moving average direction confirms the trend very quickly. South 32 here, the moving average is flat, the price is rotating around it within a trend reversal pattern. So you can see how I'm combining all those things together. But once it breaks above the trend reversal pattern here, you can see it moves above the average once, twice, three times. The weighting is getting heavier in the trend intensity indicator. Okay, so that's where I can identify a change in conditions. And now I've got the beautiful trending nature of a moving average. Okay, now here we're far away. This is why I use stops. Stops become, once I'm in a trade, when I'm entering a trade, analysis is important, but once I'm in a trade, the stop is the most important. The trend intensity indicator gives me a guide, but stops are it because it's money management, and that is the most important thing. So with South 32, your stop will be a lot higher than the moving average is at the moment. Market is moving up equals trend. Price trades above a rising moving average, which I just explained to you a minute ago. That's how that works. How to use it? Market is moving sideways, no trend. So if the price is rotating around a moving average, like it is here for CBA or like it is here for CBA now, we're getting no trend. It equals no trend, okay? So I need to wait for this to happen, for this to start turning up when I start getting a break of this sort of thing. And I've also got other things in there like volume and momentum to help guide me a bit. So that's how I use a moving average. If it's trending up, the probabilities the price are going to go high. If it starts to go flat, then there's possible change in direction. So that's the moving average. The exponential moving average is only one of four components weighted into the trend intensity indicator. It represents the probability element, okay? So that's the CBA chart there, and you can have a look at that there. The first part is trend begins, price moves above the moving average, which is now rising, okay? The trend develops, stays above the trend, then we start to get a break here. This is where we get stopped out here because our stop goes off. But the price starts rotating around a flat moving average, so we still have no trend. We're still in a corrective pattern at the moment. Basis the moving average. This is the one component. Okay. Remember, indicators are always secondary to price. Price is vital. The only stock market advice you can trust is the price action. The price never lies to you. Okay. It can't kid you. Okay. Now. That's all I've really got for you today. The newsletter was out last week. For those that you haven't seen it yet, if you're taking a trial, go and check it out. There's lots of information in there. That comes out once a month. So that's there for you. So let me just get rid of that again. Sorry about the phone call. So to finish off, I want to reduce the number of unreliable signals. That's always my aim. So not to get too Nancy, fancy, anti, whatever it is. Don't get too smart for yourself. Just kind of go back to the basics. Use solid, simple, tried and tested rules-based evidence, and doing so lift your success rate, because you will. Okay, you won't have any confusion. It's just yes, no, go, stop, that sort of thing. Portfolios have retained a capital preservation tack throughout the corrective period from August 21 as the market rotates and consolidates. Now, the market could have gone down a lot lower, we didn't know, but it does happen every now and then, whether it's a GFC or COVID, sometimes this happens, and I don't really want to be there. So that's why our stock picks will reduce so quickly, okay? But our portfolios have kicked in with things like Computershare and South 32. So even though there's a small amount of stocks, we're still able to make some money. So patience when the trending period hits, we'll be back there. So when the trend hits, we're going to be there. If BHP makes a new high, CBA makes a new high, trending period starts, the XJO, ASX 200 makes a new high, then we're on it again, okay? And that's when another trending period is likely to start, likely, as I say. Okay, so be smart, Have patience, hold your nerve, be disciplined, and you'll win. Okay, so stay safe, watch your trends, heed your stops, and I'll see you all next week. I hope you enjoyed today.